The UK economics grew by 0.2% in the 3 months to January, overlapping the increase of the early 3 months. The paper of the Office Space for Domestic Statistic, ONS, showed a choose-up in operation in January while the economics advanced by 0.5%. The ONS told force in IT, public health services and wholesaler trade displacement waterfall in the manufacture of metals and cars, and building maintenance job. The growth in wholesaler could specify accumulation front of Brexit. The full exit of consumer goods and services in the UK, or total national food, gross domestic product, grew by 0.2% in the 3 months to the end of January. The services segment, that accounts for on 80% of the individual segment economics, grew by 0.5% on a hilly 3-month base, mostly managed by wholesaler and retailer trading. Rob Kent-Smith of the ONS told increase through the newest 3 months had remained poor in waterfall in the exit of metal means, cars and building maintenance job all moisturizing economical increase. Yet, he added how was displacement by powerful amateur performance in wholesaler, IT and public health services. In January the economics staged a bit of a return, increasing by 0.5% the services segment, that accounts for on 80% of the individual segment economics, grew by 0.3% in January following a 0.2% drop in December. Building, that accounts for on 6% of the economics, reversed DEX drop to increase by 2.8% in January. Manufacture and manufacture exit as well both of grew in January, possessing contracted in December. Yael Selfin, head political economist at KPMG, told the Information affirmed increase pulse in the UK economics had stalled. The at first glimmer of GDP information for the year points to a UK economics soaring so under its increased capacity, as we expect for the Brexit fog to squander. Ms. Selfin told she anticipated increase to stay suppressed in the brief term. Yet, Andrew Wishart, UK political economist in Equity Economy, told the numbers stipulated several assurance how the UK economics is aeration a policy meltdown at household and a slowing across the CQ so of year. The information may worsen in February and March if Brexit has inflicted consumer and firms to achieve for the handbrake, he added. Soren Thiru, chief of economy at the UK Chambers of Trade, told the facility segment remnant the major motorist of UK increase on the hilly 3-month action, in industry manufacture and building compressing. In spite a increase in January, the manufacture segment remnant and region of anxiety in considerable price pressures and decreasing consumer demand in key markets weighed on operation in the segment. The absence of clearness on key aspects of how companies will work following March 29, as the opportunity of a not-deal Brexit, has led lot firms possessing to get dramatic activity to protect their operative, that has leading in superfluous expenses, distraction of asset and losing of industry, conquering common economical operation. It seems it depends on your spot of type. Several experts believe the growth in wholesaler operation does alarm how several business community are house up stocks front of Brexit. KPMG's Ms. Selfin told Down there was testimony how accumulation in expectation of Brexit has bolstered increase in several industries. Yet, at Equity Economy Andrew Wishart told Down there was slight testimony of stock building, in exit in the transportation and store segment declining in January and the 3-month increase in imports weakening away. The ONS was incapable to commentary on if the increase was related to UK manufacturers' accumulation. The inconvenient truth is how the economics has lose rate. Increase of 0.2% through 3 months is a faction of which the UK characteristically achieves. Brexit ambiguity appears to include clogged industry invest, time increase in the Eurozone has fall way brief of consumer expectations. Though the economics advanced by 0.5% in January 1, though the quantity crunchers who compute these monthly average estimates recognize how they're flying and requirement careful treat. And Jan's bounce was managed by manufacture and building. but surveys propose latter industry operation has been managed by acceleration up manufacture of completed consumer goods front of Brexit quite rather than new orders, although the ONS numbers don't differentiate among these. And the bounce follows really poor months for manufacture and building. Exit through the recent 3 months in both of was plain. Full increase through the recent 3 months was managed by services, in special the wholesaler retail, once again alluding at stock building. The mist of Brexit may include in fact pressurized operation of deceased. For how, increase is at top slow.